Hey, came to bring you your Boulder County market update. Let's dive right into what's happening in Boulder County. I think it was important this month to really break it into detached and attached specifically. We've been doing this a lot lately, but more so than ever as you kind of see some of this unfold. Right now, our average sold price is up about 6.5% year over year. Now, this is really dependent on where you're at in the market, and you're going to see this here. But good news is detached single family homes seem to be doing pretty well. What's really helping that in many ways is the fact that we're down about 16.5% for our active units right now. We did have a few less go under contract last month than we had year over year, so our under contract number is a little short, but we have actually sold 3% more detached single family homes than we did this time last year. Cumulatively, right? So we look at the attached market also is very different, right? I mean, active units are only 3% down, under contracts are minus 20%, which is staggering, and average sold price looks up, but it really shouldn't. So we'll dive into that a little bit as well. You can see we've sold 5% less attached, even after being in a really low year last year. If we look at active listings, you can see here the detached single family homes. This is just that green line. So you can see based on the market, really what we're looking at. And Boulder itself, 361 active units on the market. So it's got a lot of inventory, right? High price points leads to extra inventory. If we look at Longmont, you can see there's almost 300 homes in Longmont on the market. That's 9% less than last year. And then once you get out into the county, we're really seeing less inventory on the market. Erie's down 25%, Lafayette, Louisville, Superior, some of those are down 45% year over year. And Niwot, a little bit of elevated inventory level, only up 11%, much more due to the price point as well. The attached market, though, here's the kicker, right? The City of Boulder has almost 300 attached units out of 490 actives, so it's more than half the inventory for the entire county. That's actually a little bit less than it was last year, but you can see an increase in inventory in Longmont by just slightly, and 25% less inventory out in Lafayette, which is a good sign. It's brought some stability back to that market. Erie, though, 40% more attached units on the market out in Erie. Now let's look at the month supply of inventory um, based on where it's at, right? So that table at the bottom can tell you a lot. Niwot's got 6 months of inventory. Boulder's got almost 5 months of inventory. And those are really the outliers, right? Higher price points, less buyers buying in that part of the market because money's so expensive. And as you get into some of the L towns, we're less than 2 months of inventory in a lot of them. So some fairly competitive and contentious parts in the market, even though we're moving into the third quarter, or we're in the third quarter, and you're seeing less buyer activity. You really are still seeing competitive markets out in the county. If you're in Erie or Longmont, though, a little bit more of a balanced approach. If you've got the attached market, it's a very different situation. Niwot has a lot. Superior has almost 8 months of inventory on the market. The City of Boulder has 6.5 months of inventory. And then there's everybody else who's sitting in the fives or even the high fours, right? And so that's really tough. Lafayette is the one that's a real standout here with less than 3 months of inventory. Remember, it's townhouses that are newer, so they should trade a little bit more like a detached single family home, even though they're not quite that. Days in MLS, detached here as well. You can see 38 days on average. It's very similar to the last few months. That should start to rise come the end of the year, but here we are looking at the middle of the year where it's still pretty quick. You can see there's a couple of places that are worth noting. City of Boulder is at 57, so much slower there. Niwot, very similar. And then the fastest part of the market is that Lafayette, Louisville, Longmont markets where price points are a little bit lower, and there's plenty of buyers out there shopping with that lower inventory levels. The attached part of the market, very different. You're seeing 46 days in MLS. This has been the fastest day in over a year, or fastest month in over a year. Some of that's really largely due to stuff selling in the City of Boulder, Louisville, Lafayette, and a lot of stuff on the higher end. But look, out in Erie, it has been tough, 124 days in MLS. Okay, price point, super important to tag this one. Detached single family has had 2 months in a row now with an insanely good higher end market, luxury, and then even 1.5 million plus. We've seen so many sales. Look at the 1 to 1.5 million. 59 sales. So if you take a look at this, you can see the year over year change. We've seen an increase coming over there. You've really seen almost a 40% increase in home sales from 2 to 2.5 million year to date. So lots of sales taking place up there. We are struggling in the 5 to 600,000 part of the market. It's slowed a little bit, but other than that, the lower end of the market seeming to be doing pretty well. Now, the active units of inventory on the market have been a little tougher because we really are seeing less inventory across most of this market. So some of these markets, 600 to 800,000 minus 42%. So that would be why it feels so competitive in certain parts of the market and other parts don't. Now, attached, a little bit of a different situation in some cases, but definitely a lot of stuff getting rented out. You're seeing less luxury on the market, and it could be for a number of reasons, but we're definitely put more of them under contract as well, which is kind of cool to see. If you look at that 800 to a million part of the market, that seems to be the toughest part of the market there, or 800 to really 1.5 million. You've seen less active units in the market there. And then if you look at the average, the solds by price range, 800 to a million is really, really struggling. We've sold half as many as we have last year, and it's been brutal. But keep in mind, people are still buying homes, so you can absolutely still get stuff sold. Now, detached single family by price range, you can really see where we're seeing a lot of that stuff in the county, right? The lower price ranges are moving really rapidly, under 3 months of inventory, 2.5 months in some cases. If you get to 800 to about 1.5 million, you're a fairly balanced market, 3 months. And then if we get 1.5 million on up, you really start to get into where buyers are more favored in the marketplace, but we're seeing more sales take place. Pretty cool to see that. The attached part of the market, this is where it's a little tougher, right? We really start at 4.5 months of inventory. It's a little brutal, and it just goes up from there. If you're at 6 to 800,000, we talked about some of those sales, 7 months of inventory. It's just hard. It's taking longer to sell, and there's just less buyers out there looking in that price range. Okay, so with everything going on, let's talk about average sold price. I really like the trailing 12-month views, so that TTM percentage change number is a number where you can really get a better gauge of what's happening, because high watermark for the year we hit in June, lots of luxury sales. We saw a bunch more again in July, and it's really bumped that average sales price up. A little misleading in many ways, right? Because year over year, it's gone up 6.5%, but over the last 12 months, it's totally flat. And it's happening in different places. City of Boulder is actually seeing shrinking sales price worse than almost anywhere else. It's largely due to that high price point, right? So stuff over that 2-3 million mark has really come back down and settled in price. Louisville is still up 6% year over year, or that trailing 12 month, and same with Superior. We're selling that little bit higher product than what was there before, so that's definitely helping and changing that. But a lot of those more median areas, like Erie is a good example, 3% increase in sales price. Longmont, nearly flat, minus 1%. Average sales price for the attached single family, if you look here year over year, I told you that 2.5% seemed wrong. Well, it's because over the last 12 months, we've been down almost 4%. And if you're looking at it in the city of Boulder, we're down about 6% on over the last 12 months. So you can really see some of those changes. A lot of stuff out in the county, though, is closer to flat, minus 1% in Longmont, minus 1% in Erie. And then, of course, you can kind of see where the trends are taking place of the sales. Detached single family, super similar to last year. A couple of months are a little better, a couple months are a little worse, but so similar. If you look at the attached market, you can just see it's been just a little bit of a struggle. May really didn't help us. We had a really tough May in the attached market, but you can see we're selling a little bit more in the last month than we did before, but we're still down 5%. Last slide I've got for you, the percentage sold to list price for detached single family. You can see we're floating around exactly where we were last year in many ways. Over the last 12 months, you've basically seen it flat, but it has been nice to see a little bit of seasonality come back. It's really helped some of the price integrity in our market. So we're at 98.6%. Nothing to write home about, but it's okay. It's hanging in there. The attached market, though, 97.8% is a little bit tougher, and you can see that that's still dwindling, and it's been super flat. So no seasonality means buyers control this market so much. Hopefully that's helpful, and if you have any other questions or have any other data needs, please reach out to me, Anthony at Land Title. See you next time.